Join us now to talk about the election and what to expect from today's bank earnings. Mona Muhajan, she is a portfolio manager and U.S. investment strategist at Allianz Global Investors. And I was actually, once again, sort of talking about some of your thoughts, Mona, and that was about the move yesterday. And the move yesterday was sort of a return to the excitement about stay-at-home stocks, maybe because the cyclical story, which has been pretty good. Maybe that's in question now because of a possible second wave and what that would do to consumers.
Yeah, look, we certainly are getting some momentum around the tech names again, perhaps in part because we are seeing some big events coming out of names like Apple and Amazon, but also because we got, probably incrementally negative news out of J&J on the vaccine front. We're certainly seeing this tick up in cases and perhaps a tick up in hospitalizations in the U.S. thus far, although keep in mind, we have not really seen that tick up in deaths yet. The death rate seems to be contained thus far, so we'll see how that plays out. And then, of course, that hope around the stimulus perhaps fading once more. So it does seem like we're back to the growth, secular tech, the stay-at-home COVID winners and cyclicals for now are taking a bit of a backseat. Of course, they've had a nice run over the last, since the beginning of this quarter, really, and since that 10% correction we saw in the S&P. So makes sense generally. Markets tend to be or seem to be supported here, but the underlying drivers seem to be shifting a little bit.
We've seen this phenomenon again and again, but so it was all about the stimulus for 3, 4, 5, actually for a week or two, well, for longer than that, but this latest brouhaha about the stimulus. And I don't know if we're any closer now, but the market seems now to be focusing on something else, whether we get a stimulus or not. And it's almost like it gets desensitized to what the concerns were recently. Is it now focusing on how J.P. Morgan does, how Johnson & Johnson does? Is it going to be a shift to earnings?
Yeah, certainly. I think we were in a little bit of a void of information here. And so the focus tended to be on political election news. The focus was on the stimulus. Now I do think we'll get some concrete numbers out of earnings, some nice indications of what, companies are seeing for the third and fourth quarter. And of course, how they beat this quarter as well. And so I think that will be a good focus. Keep in mind, though, the overarching theme here, and the reason we're not seeing any dramatic sell-offs, et cetera, is we do still have that ongoing support from monetary. And the fiscal stimulus, while it may not happen now, I think markets are now comfortable with the fact that at some point we will get stimulus, whether it's before elections or early in the next term. Generally speaking, I do think that we're looking at an environment in 2021 where, of course, at some point also we will get some approval of the vaccines. It will take some time to manufacture and distribute, but at some point there will be a return to perhaps a little bit more pre-crisis, pre-COVID normals. And so people and investors are thinking about positioning for that in the weeks ahead.
Do you think at this point the blue wave scenario is that the market is comfortable with that, or does the market still not know what to expect?
Yeah, I certainly feel like the narrative has shifted, and we've seen it, in different articles and really kind of playing out in the market as well. There has been this shift to consensus where we will get not only a Democratic president, but perhaps a Democratic Congress. You're seeing it in polls and betting odds. Of course, it's still, we still have a good 3 weeks left, and President Trump is clearly getting out there more. So we'll see how his narrative and his messaging shifts in the next 3 weeks. But given this new kind of consensus, it does seem like there is less of a chance now of at least that very contested election. If we do get, very clear, decisive victory on November 3rd, both in person and in the mailing, ballots, I do think that one of the walls of worries for the market has been lifted. And then, of course, over time, a Democratic Congress, a Democratic president will mean a higher tax regime at some point. But perhaps markets are also thinking there's some offsets to this, including, the investment, fiscal stimulus, investment in areas like infrastructure, like clean energy, like 5G technology, perhaps. And then, of course, we're also seeing perhaps better or more stable, U.S.-China relations as well. So there are, some pros and cons in a blue sweep scenario, but I think markets have gotten more and more comfortable with this overall.
Shepard Smith here. Thanks for watching CNBC on YouTube.